Good morning. It's Wednesday, April 30th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So we got a collapse going on overnight in the precious metals market. Is this just a pullback of a start of something bigger? So we'll see. So let's check it in the markets and some of the key drivers for today's session. So it is the end of the month. So stock futures, they are drifting lower after 6 straight days of gains as the S&P 500 and investors wait for a busy day of earnings, macro data, and the focus is going to be the results of Meta and Microsoft, GDP, and inflation numbers. So looking at the markets here, S&P 500 down about 20 basis points here at 55.73. So it's down 10 points here. High in the overnight session, 55.83. We'll want to keep an eye on that 5,600 level. Your first level of support right around those lows, 55.48. Below that's going to be 5,500. So looking at the NASDAQ here, down about 0.3 of a basis point here, down about 70 points at 19,572. So high overnight 19,622, low overnight 19,485. So we will have around 50 companies here in the S&P 500, include a Meta, Microsoft, and Caterpillar. And the question is does the AI demand and the data center spending, does that continue to show growth? That's what's going to affect companies like Microsoft, companies like NVIDIA and elsewhere because of the rising competition here with DeepSeek. Now, the economic data coming out, and it's nice that we're pivoting back to economic data because it could give those indications of, is this recession really coming? How much damage has the consumer felt here because of the tariffs and things like that? So we're going to see Q1 GDP and PCE, that's the inflation gauge. Then we'll see April manufacturing ISM tomorrow, and then the April jobs report on Friday. So real GDP likely slowed to a standstill in the first quarter because of the administration and the policy shifts that disrupted activity. Businesses, they really front-loaded their imports here ahead of any kind of tariffs here, and consumers rushed out to buy any kind of durable goods. So they wanted to buy things like cars and things like that are going to be impacted by the potential of tariffs. Now, last night, Trump, he defended his tariff policies, marking his 100th day in office, but he also renewed that criticism of Fed Chairman Powell, and it kind of disrupted some of these markets here, saying he's not really doing a great job. Now, you look at the precious metals overnight, they're continuing to sell off here and making an accelerated run lower. So you got gold futures 32.78. Now, if you're working closely with me, and we've been in this discussion here, you can know that I've been very reluctant to add any of these precious metals up at these lofty levels because of the fact that I felt that, and you never use feelings as your trade policies here, but if you look at the charts, they look like they want to pull back here. And the first level of support comes in right around this area on the gold market, about 32.65, 32.75, somewhere in that region here. So if you look back several days before this run up, we consolidated at 32.65, and that was your resistance point before getting that breakout and that 3-day run up to those all-time highs. Now coming back down, we keep bouncing off of that level here. So it's going to be interesting to see if we hold, because if we don't hold here, most likely the next lower level on the gold market is going to be right around that 32.02. So again, I sent out the chart pack here yesterday, but I'll also send another update here this morning. So those are your support, your resistance, and what the charts are indicating. Now, if you look at the ETF flows, those are also mirroring an outflow here, and the reason why gold futures are starting to pull back here a bit. So exchange traded funds, they cut about 23,500 troy ounces of gold holdings in that previous trading session. It brings this year's net total to about 6.2 million ounces. So it is the sixth straight day of declines here, and the longest losing streak since November 18th, right around that election here, when we saw that big outflow and that inflow into small caps, inflow into some of the cryptocurrencies surrounding the election. Now, what's interesting is you saw a rotation start to take place because we were talking about the gold-silver ratio, and there were some keys out there that were, one, we were looking at copper and copper demand in China, and two, we're looking at the gold-silver ratio, because if you go back to about April 23rd, that's when it hit its lows of 97-1. Now, unfortunately, we get this big liquidation because industrial demand commodities are really getting hit in the overnight market. So if you look at ETF flows again for silver, they added 4.19 million troy ounces in the previous session, bringing this year's net purchases up to about 16.8 million ounces. So it was the biggest one-day increase since March 24th. So you get the rotation going on here. So the year-to-date percentage change, gold up 7.5%. Small downtick there. You get silver up 2.4%. Big jump here, but might spark some liquidation here once we get the session going in the morning. Otherwise, we could potentially see some of those dip buyers coming into the market. So gold silver ratio 101 to 1 right now. Again, key level to watch 97 to 1. Now, why is silver getting hit so hard? Why is silver down 3.37%? Gold futures down 1.5%. Well, it's the copper market down 4.69%. So if you start to look at these industrial metals here, China's factory activity slipped to the worst contraction since December 2023, showing some early signs of the damage with the tariffs. You also have Chinese factory activity slipping into contraction territory with that official manufacturing purchaser manager index falling to 49 from 50.5 in March. 50 is the bull bear line. That's where you get either contraction or you get expansion above. So the indicators are showing kind of some of that early damage from the tariffs here, with new export orders falling to the lowest level since December 2022. You get employment in the manufacturing sector also contracting to its worst pace since February of last year. So the result, again, copper down 23 at 464, silver futures down $1.17 at 32.40. So your next support level on these are going to be about 450 in the copper market, and then you look at that silver market. 32.71 was that first support. Now we're breaking below that, so you do a Fibonacci retracement and you'll look and you'll see right around that 32.11 is going to be a critical level of support. You got platinum futures pulling back, so 980 was the first support. Below that's going to be 960. Once these markets start breaking below certain levels though, they look very dangerous to hold on to the long side. So another thing with the silver market here, and part of the reason why it's getting this 1-2 punch, is that First Solar shares tumbled about 13% in the pre-market trading on Wednesday after the solar company cut earnings guidance for the year. This is a name we used to use and follow way back into the day. I'm talking like the 08, the 011 era here, because it would reflect silver demand. First Solar is a solar panel manufacturer that uses silver in the manufacturing process, particularly in those thin film solar cells that they produce. Now, looking at outside markets here, you got crude oil futures slipping below $60 on its largest monthly decline since November 2021. Signs of economic growth kind of slowing down here, and the decreased energy demand. So the trade war has really been hurting the economic growth on energy demand, and then also you get OPEC Plus kind of loosening some of its supply curbs here and contributing to that decline in oil prices. So the data here in the US shows a slowdown. You got the Chinese activity, Chinese factory activity also slowing down. You got rising stockpiles. You got OPEC expected to increase supply. So you kind of getting this 1-2 punch in the energy space right now. So looking at the outside markets again, grain slightly lower, dollar slightly higher, but below that 100 mark here. Euro currency just a bit lower here. And then again, you got all those metals under some significant pressure. So you got any questions, give us a call. Otherwise, shoot an email to info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss and may not be suitable to all investors. Good luck, good trading.